welcome to Kaya Limited Q1 FY2025 earnings conference call hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sachin Bobade from Dolat Capital. Thank you and over to you, sir.
Thank you, Aditya. On behalf of Dolat Capital, I welcome you all to the Q1 FY2025 earnings conference call of Kaya Limited. Hope you all and your family members are staying safe and healthy. From the management side, we have with us Mr. Rajiv Suri, Global Chief Executive Officer, Mr. Rajiv Nair, Chief Executive Officer, and Mr. Aryan Dhariwal, Chief Financial Officer. Now I hand the floor to the management for their opening remarks and then we would have question and answer session. Over to you, sir.
Thank you. Good evening, everybody. I would like to welcome you to the conference call on the company's behalf. The investor presentation has been updated on our website kaya.in and contains the financials, key metrics and business updates. I hope you have had a chance to go through it. Let me begin the conference call with highlights of Q1 performance, starting with Kaya India performance. The clinic business registered a 8% revenue growth over Q1 FY24. Product business at clinics registered a revenue growth of 8% over Q1 24, mainly driven by categories like hair care, body care, skin care and sun care. Services business registered a revenue from operations growth of 8%, mainly driven by categories like body contouring, acne, hair care and beauty facials. Our body contouring segment continued to show robust growth of 25% over Q1 24. Hair care was relaunched with advanced diagnostic tools focused on hair growth and hair fall in Q1 with a completely new customer journey and witnessed a 14% revenue growth for Q1. Customer count grew by 3% over Q1 24, aided by additional customer counts through omni-channel route. NPS scores continue to trend higher, touching 88, reflecting consistent great customer experience. A quick update on other initiatives. As you may be aware, we started the brand refresh campaign and program last year, which comprised of 3 components, which is relocations, renovations and updating our service technology. To give an update on the 3 components, on relocations, as part of the continued clinic refresh initiative, we relocated 3 clinics in Q1. These clinics are in Kochi, Jaipur and Hyderabad and enjoying positive customer sentiments as captured in the GBP of the clinics with a rating of 4.2, 4.8 and 4.7 star rating respectively. A total of 9 clinics have been relocated since the start of the brand refresh program in FY24. On renovations, 3 clinics were renovated in Q1 25, making it 14 renovations from the start of FY24. On service technology, to uplift customer experience and outcomes, we invested in 38 new dermatology machines, including in anti-aging, acne, body and laser hair reduction in Q1. The company, as we are aware, is a leader in innovation and I will give a short update on that. On the AI app, our proprietary AI tool is being used successfully by Kaya's expert dermats in clinics for consultative skin services. AI-powered dermat consultation contributed to 19% of anti-aging, acne and brightening and pigmentation collections. New product development contributed to 5% of Kaya India clinic collections. New service development contributed to 4% of Kaya India collections. And use of marketing automation, which included WhatsApp bot and web bots to our customer base, helped us improve the customer funnel. Our Kaya Smiles loyalty program grows from strength to strength, and it contributed to more than 90% of Kaya clinics collection in Q1. We focus on experientials for our Kaya Smiles Platinum and Kaya Smiles Gold Elite base by giving free facials, which helped us with the collection growth and increase the footfall to the clinics. In Q1 25, the loyalty program grew by 12% in collections. On the people front in Q1, Kaya was honored with the prestigious Thrive Award by the Indian Business Council. This year we have been recognized for our outstanding L&D initiative, which is customer-centric selling. An update on collaboration with Marico. Earlier this month, the company announced that it will collaborate with Marico. Under this arrangement, Marico will have exclusive rights to scale up Kaya's range of efficacy-based products outside of Kaya clinics, thereby accelerating the product growth and the brand visibility for Kaya, which will in turn lead to increased footfall for the Kaya clinics. Now going on to the Middle East business. Sale of the Kaya Middle East FZD and its subsidiaries has been completed on 6th of June, and accordingly Kaya Middle East FZD and its subsidiaries has been classified as discontinued operations in the quarter ending 30th June 24. The group has recognized 108 crores as profit from discontinued operations in the consolidated financial results during the quarter ended 30th June 24. Update on rights issue. The rights issue process can be started after the completion of Kaya DMCC sale, which is pending subject to authorities' approval. On the financial performance, the revenue from operations at a standalone level is at 52 crores for Q1 25, a growth of 5% over corresponding quarter 24. Standalone profit after tax and other comprehensive income for Q1 25 was at INR 6.4 crores after considering one-time gain of INR 6.2 crores for reversal of impairment on the investment and INR 9.5 crores for sale of trademark, as compared to a loss of 4.5 crores over corresponding quarter 1 24. The detailed financial information update is already with you in the uploaded investor presentation, and you may refer to that for additional information on the performance. I now open the session for questions, and my colleagues and I will be glad to answer them. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Bharat from Moneybee Investment Advisors. Please go ahead.
Yeah. Hi, am I audible?
Yes, you are.
Yeah. Hi, congratulations for the great set of numbers. So my question was on the tie-up agreement with the Marico. So can you just clarify on what kind of agreement do you have? Do you have to pay them royalty, or is that like a revenue share or something?
So we will be receiving royalty from Marico on sale of products of Kaya branded. But the main purpose of this, besides royalty, is the growth of products which Marico can do, because they are strong at channels outside our clinics, which include e-commerce, GT, MT, and therefore they will be investing also in marketing the products in a big way, and we believe this will increase the brand salience and in turn also improve the footfall in the clinics.
Okay. So could you just clarify a little bit more on how much the royalty will be, if you would be able to disclose it?
Yeah. So the terms of the collaboration remain confidential, and we cannot speak in public about it, as you would imagine. But to say that the growth will be there, the agreement is commencing in September, so next month, and we are going through a bit of a transition right now, and we should start to be able to share some information once it starts.
Okay. So my another question was, in one of the previous calls, you were saying that the Indian clinic business, the EBITDA per clinic was around 28%. So I just want to know, was that excluding, I'm saying, the corporate cost? So I just wanted to know if that includes the rent cost, or was it pre-rent cost?
Includes the rent cost.
Okay.
And excludes the corporate cost. And quarter one last year it was 25%, and quarter two this year is 27%. And quarter one this year is 27%.
Okay. So
Hello, sir. Sorry to interrupt. Do you have a follow-up question? Please get back to the queue, as several participants are waiting for their chance.
Okay. Yeah, I just have one question. Can I go ahead?
Yes.
Okay.
Yeah. So I just want to know, so how do you see FY25? So how many more relocations and renovations or new clinics are you planning to open, and what will be the capex for each of them, if it's a relocation or renovation or a new clinic that you're planning to open, and how much is how many months does it take to break even in a new clinic?
So we are planning to open around 6 to 8 clinics in this financial year. When we talk about the capex per clinic, it's around 1.8 to 2 crores. And when we do a relocation, the capex is around 0.6 crores to 0.7 crores, around 60-70 lakhs per clinic. With respect to the break-even, clinics break-even, it generally takes us around 12 to 15 months to break even a clinic.
Okay. Yeah, thank you. That's it from my side.
Thank you. Our next question is from the line of Pratik Giri from Shubhlab Research.
Mr. Suri, am I audible?
Yeah, you are. Yes, Pratik.
Yeah, Mr. Suri, thank you for taking my question. I have two questions. The first one is, Mr. Suri, if we look at our ad spend in last 4 years, 3 to 4 years, it has not gone up materially. From 9 crore to 11 crore we have spent, whereas our revenues have gone up from 90 crore to 180 crore. Though I understand there is some post-COVID demand in play. On this context, Mr. Suri, I have two questions. So how should we read into this? Does it mean that this much of ad spend is enough to drive growth in the existing 74 stores? And how do you see it going forward? How many more clinics we can open further without significantly increasing the ad spends? That's my first question, Mr. Suri.
But also, this one 90 to 80.
Yeah, should I? Yeah, okay. So marketing spend wise, we actually maintain a ratio which is quite standard to net revenue. in the range of about 7 to 8% of net revenue. That's the standard average that we keep for marketing spends. And in terms of growth factors, I think the growth factors, as you saw last year, the net revenue growth was about 20%. And this year we hope to maintain a similar trajectory, but the spends will remain 7% as part of net revenue.
Okay. Is this Aryan?
No, this was Rajiv. Rajiv Nair.
Oh, sorry. Yeah, Mr. Nair, so that's what my question is. Actually, last 4 years, if we see from 90 crore revenue to 180 crore revenue, correct? But if you look at our ad spends, it has nearly in the similar region of 9 to 10 crore per year. So, I mean, I just wanted to get your sense on this. Is it going to be stagnant for some more time? In the meanwhile, we open more stores, or we can. I mean, how should we read into this?
So, Pratik, when are you referring to 90 crores to 180 crores? What are you exactly referring to? Because the marketing expense has always been around 7 to 8% of our revenue, and the growth factors for us on year-on-year basis were the new introduction of new categories like body contouring, hair care, and the expansion, and something from the relocation renovation.
Actually, clinic collections last year to this year in terms of the like-for-like clinics was roughly
Around
about 7%. Yeah. So it is not 90 to 180. So if you could just clarify.
I was not referring anything to pre-COVID.
So, Mr. Nair, if I'm not wrong, probably March 21 revenue was around 91 crore, and March 24 revenue was 176 crore.
Yeah, I think that's the COVID impact of that particular period. We are now starting to compare like for like to previous year. At that particular point, it was post-COVID, so we were just tracking pre-COVID to post-COVID numbers. So I think that's the reason for the 91 crores.
I think we should not take the COVID period, everything was out of
clinics were closed during that period.
Should not use that as a source.
Understood. So fair point. So going ahead, we should see a proportionate increase in marketing spends as we increase, our revenues and store count as well.
Absolutely.
Got it. Mr. Suri, I have second question. I just wanted to get your opinion on our ATS and footfall. I understand we operate in a high ATS category, which is probably giving us 1,900 customers per clinic per year, which means around 150 customers per clinic in a month. So I just wanted to get your sense on, entering lower price services. Can that help us bring, incremental revenues and profits in turn, at corporate level?
So your source of numbers is probably related to, the collection and the transactions we make. In addition to that, we also have services and multiple services in the clinics, and we do roughly about 50,000 sessions, which if you look at it divided by 75 gives another 666 sessions per clinic per month.
Yeah.
Per month, huh?
Yeah.
So that times 12 is about 7,000 more. So I think the number of customers who actually come to our clinic, in addition to the ones which you are talking about who are purchasing, are also multiple coming back for the sessions which they are taking. And from the sessions which they are taking, we have a BTC, which is a bill to convert of about 40 to 41%. 47%. So you'll see that we're also getting, sales from that. It's a combination of both. And we can take you through this offline. We also discussed it with you yesterday. Yesterday, and then if you want, we can have a more detailed discussion offline.
Understood. Fair. Understood. That's it from my side. Good luck to the entire team. Thank you.
Thank you. Our next question is from the line of Ishit Sheth from Envil. Please go ahead.
Hi, good evening. Thanks for taking my question. Sir, a couple of questions. One is that on the deal that we've done with Marico, how is it different than the old deal that we had done with them? Because again, I'm hearing that, we will get a part of, the revenues that Marico does from Kaya products as a part of royalty. So how is it different from the old one? And Marico in the press release yesterday had said that, they are targeting about 100 crores of sales in the next 4 years or so. So is there any ballpark number that we have? And how does Kaya stand to benefit from this deal?
So look, between last time and this time, I think the main difference is there is no overlap in channel. Because last time we were also selling on e-com, they were selling on e-commerce, we were selling in GTMT, they were selling in GTMT. So the lessons from the previous time have been taken into account this time, and they've got exclusive right for e-commerce, GTMT. So it's a clean strategy where they will be able to execute, and Kaya brand will be represented by one company rather than two companies. So I think that was the big change from last time to this time. Besides that, they've got several, e-commerce now, D2C brands, and of course, they're famous in the other distribution channels. So you have seen from their press release the target which they expect, and that's what we are also expecting, the similar number. And then we will get a royalty on the number. Yeah.
So if I understood this correctly, we've given them exclusive rights for the channels that they will be selling it through, right?
Yes.
Now,
yes.
the second question will be, is there, because like say for example in e-commerce or even in now GTMT, we've seen discounts happening for a lot of products, right? So is there some kind of cannibalization that happens from clinic level product sales to the sales which happen through distribution channels? So instead of us getting the full revenue, we only get a part of the revenue as royalty because maybe that product is cheaper by 10%, 15% at through the Marico channel.
So, see, as far as the customers are concerned, they're coming to the Kaya business mainly for service.
Right.
14% of our sales are product from that, and a high majority of them are high price premium products which are 1,000 rupees and above. Right. And therefore we believe the cannibalization, if there is any, would be minimal, and we are not expecting any of that. We are continuing to focus on high price items. We have a range which goes up to 3,000 rupees, and we believe that the cannibalization, if there is, would be minimal. But and also noting that all the products they sell will have a QR code on them, which will bring the customers back on the Kaya website, and therefore we will be able to get lead generation, and from the lead generation, additional footfall into our clinics. And I think that's really the game which we are doing, is how do we increase footfall into the clinics. And secondly, the investment they will make in marketing will increase the brand salience of Kaya as a whole, and that should again help us getting more inorganic traffic to our website as well as footfall. So net, we believe that it is a win-win for both the companies. And
right. Yeah, no, I get that point. My only point is that for us, for Kaya, the only question that I have is that, say if we are at, say, 14% of sales, so we are at, say, close to, 25, 28 crores kind of number of product sales, that 28 crores, and if, say, Marico does 100, assuming that the royalty is capped at 5-6% generally for all Indian companies, so then incrementally we get only 5 crores out of that 100 crore sale. But you're saying the benefits of the footfall, increased brand salience and all of that accrue to us in the form of higher clinic level, footfalls.
Yes. And I think that's where we are, because, for every transaction which comes to the clinic and conversion, our average transaction is roughly about 17,000-18,000. And
correct.
A new customer for us is 22,000. So you can imagine the benefit that would have on the footfall, because every new customer on an average is 22,000 transaction, average transaction value.
Yeah, no, I get that. And so second question is, I think for even for our India business, now that India is now the bread and butter for us now, how do we see revenues moving up over here? Because I mean it's been more than 8 years where we've seen the revenues being more or less stagnant for us. So do you have some sense on, how do you see, because now the entire focus and the bandwidth of the entire management and the team will be to grow India business, right? That's where everything will be. So do you have, do you sense how we can grow this? Because say if we do 5-6 clinics every year, assuming this year is the start, and we continue to build on that, is basically anywhere between 7-8% growth that can come because of new clinics, and SSG growth has to be at least 8-10% for us to substantially see the benefits of economies of scale. So do you anticipate something of that sort?
So we can't really give a number in public forum in terms of how much percentage we expect. But I think that the strategy of a combination of like-for-like growth plus expansion plus relocation. Remember, the relocation also, the growth there is always double digit.
Right.
Will help us to grow to the levels which eventually will lead to profitability.
Got it. Okay, sir. So, and last question, if I may, this is more on the financials. What is the net debt that we have currently, post the completion of the transaction of Kaya Middle East?
So the net debt is 143.72 crores, and it is fully from the directors.
That 143.72. So just before this transaction, we were at about 185 crores. Is that correct?
193 because there was a loan from Kotak in Middle East, which has now been squared off.
So 50 crores is the net debt reduction that we've done after this transaction.
Yes, sir.
Okay, got it. Okay, thank you so much. I'll come back.
Thank you.
Thank you. Our next question is from the line of Shwet Jain from Whitestone Financial Advisors. Please go ahead.
Hi, sir. Thank you for this opportunity. So most of my questions have been asked by previous participants. I just have 2 questions. One is I wanted to understand, under body contouring, what typically services come under that? And, we had also mentioned somewhere in the annual report that body business will be a key pillar for us, So just wanted to understand if you could share some insights about this, how big is the market opportunity for us and what kind of revenue we are looking from this segment, say 2 or 3 years down the line, especially now when we are just focusing only on India.
Yeah. I think in terms of body contouring, the services, the first question that you raised was services tuned towards shaping the body. So cool sculpting being the key product line that we have, actually the service that we have, contributes to almost 80% of our revenues going forward as well. We also have skin muscle toning service, which is a product called CM Slim. And the third one is tightening of skin, which is post-contouring tightening of skin, which we use a product called Venus Legacy. We'll also try and build in some amount of nutrition consulting into this service as well, so that the people who take these services also maintain a dietary restriction. I think that's something that we'll be doing as part of the overall service for body contouring. And as far as growth is concerned, I think we've seen, consistent growth in this category over the last 2 years. Last year, I think we added about 13.5 crores worth of additional revenue in the category. And this year also on last year's number, we have grown by almost 33% in the category. So I think we do expect this momentum to continue because the other services besides cool sculpting, which I mentioned, muscle toning and skin tightening, are relatively low price services and are likely to scale up much faster. So we are also adding some machines in this financial year at a faster scale. We also have body composition analysis through a product called InBody inside the clinic, which also gives us full visibility in terms of the customer's body composition, and that helps the doctor give better consultation to the customer. So I think that's the broad gamut of what we're planning to do in body contouring.
Okay. And so my second question is just related to the competition, So just wanted to understand, what typically is our edge over other, well-known clinics such as, like if you just talk about Mumbai, it's the Ageless Clinic and Jamna Pai kind of, setup, and, other saloons also have started offering these kind of services. So what really, makes the customer come to us and stick to us?
Yeah. So if you look at it, I think, our services are fairly standardized by us in the form of protocols. I think one big thing that we spend most of our time is we just don't bring any machine or any service and just put it into market. There's a proper protocol which leads to safety, which we actually create. There are certain steps that are proprietary to Kaya. There are about 600 services that we have curated using our, mix and match based on customization for each individual customer. More than that, I think also we are not talking about a bandwidth of 8-10 doctors like some of these companies that you mentioned. We have more than 113 doctors today across the country. All those doctors have been trained by Kaya, upskilled by Kaya, so that there is a level of standardization of services across the country that we do. So safety, proper SOPs, standardized doctors, standardized machines, not buying any machines which are not FDA compliant, safety compliant, ensuring the fact that that actually happens, and constantly innovating new services. I think we also have an NSD team, which is services development team, which is there headed by a doctor, and we create new services every financial year. So that's the bit. And the last but not the least, we also have a good range of products of our own. More than 70 products, which we are largely skincare, hair care, body. At the same time, now adding nutraceuticals. So I think we create a more holistic offering in comparison to some of our competitors.
Right. Okay, sir. Thank you so much. Really appreciate this.
Thank you so much.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask questions. Our next question is from the line of Krishna S., an individual investor. Please go ahead.
Yeah, thank you very much for the opportunity. So my question is that this with respect to EBITDA, we have spoken about the EBITDA level profitability. So after that, what is the target profitability that we are looking at? That is, even after the EBITDA, do we want to, are we having a figure in mind where we want to make profit absolutely, and by what time? Do we have any timeline for getting back into the green? That is the first question.
Look, we can't indicate forward-looking statements at this call, but we have shared our plans on expansion, which will help us grow the business faster. Relocations which are giving us double-digit growth, and the existing clinics which are on positive growth trajectory, which we have seen is about 5 to 8% growth. So I think that a combination of all these three items and the strategy on body, the strategy on hair care, which is having higher than normal growth, the body grew 25%, hair grew 14%, will get us economies of scale and then eventually into a higher profitability.
Yes. I think that answers the question. And just one more question, that this Middle East business, so you said that you are waiting for approval from the Middle East authorities. So typically, of course, it is again a little bit of future looking, but is there any is there any standard time limits within which it can be this can be completed, or it's case to case basis?
So look, LGD business has already been completed, which is majority of the exit has been done. The DMCC, which is about 10 to 20% of what is left, we are expecting it by end of quarter 2.
Okay. Thank you very much. That answers my question. All the best.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask questions. Our next question is from the line of Swed Jain from Whitestone Financial Advisors. Please go ahead.
Hi, sir. Sorry, just a follow-up. So you had mentioned about rights issue. So just wanted to understand, the promoters would be infusing money, right, through rights? And what is the quantum that we are looking for the rights issue, sir?
So what we have disclosed in the last press release was that it's up to 300 crores. So that's what the number is.
And the promoters will be subscribing for it mainly. are committed
Mainly
to subscribe.
promoter, right? Yeah. Okay. Thank you, sir. So that helps a lot. Thanks.
Thank you.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask questions. Our next question is from the line of Pratik Giri from Shubhlab Research. Please go ahead.
Hi. Thanks for the follow-up. Mr. Nair, I just wanted to get some rough sense that while doing the beachcombing of the product, the potential of the product revenue, I understand that it will be difficult for you to give me a number. But I just want to understand on the current revenue basis, roughly 220 odd crores for the company. What mix do we see, say, 3 years, 4 years down the line in terms of services and products, from Kaya products?
Yeah, again, I can't give you a forecast on the future. Currently, it's about 14% of our revenue. And the focus now is going to be predominantly in the clinics and in terms of the external market, which is e-commerce, as well as the GTMT market. As I think Mr. Suri mentioned earlier, there is going to be a lot of action on the Marico front, which may help us in terms of pushing product sales in our clinic as well. So with brand visibility increasing, the mix will increase, but we don't know exactly where it goes right now, and we can't give you a forward forecast on that at the moment.
Understood. Mr. Nair, the new product development initiatives, with the NPD will also be with Marico only, or that will be with us?
Kaya will continue to create its dermatology-backed product NPD. So that's something that we'll continue to do. So there is a team that is there within the business which is looking at new product development. So obviously we'll continue to have an in-house setup for R&D.
Okay, so NPD is going to remain with Kaya Limited, and the marketing and sales will be with Marico.
Yeah, all products sold in Kaya will be NPD done through Kaya itself.
Okay. Got it. Thank you. Thanks a lot. Good luck.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask questions. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you all for participating on the call, and we appreciate the time you took to attend our investor call. Thank you.
Thank you. On behalf of Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.